Hello everyone, my name is Grega Horvat and welcome to a new technical video with Elliott wave approach for the week ahead. As you know, we have seen a very quite range-bound trading actually through the first part of summer, and this is actually not a surprise. But what is really interesting is that the more longer and more complex are these corrections, the more important and more powerful can be a breakout. So before we go to some of major markets, I want to look at the euro dollar first. So euro dollar is actually still in downtrend since 2008. We see lower lows and lower swing highs, which is a downtrend in progress. So actually I'm expecting this downtrend to continue for at least one more push down, because there is a chance that this was a completed flat correction right there, okay, for a wave 4. So maybe we are going to see another push down for a wave 5 to complete this ending diagonal. Now this is a closer look for a flat correction, 3 waves leg for wave A, then you have a 3 legs down for wave B, and a 5-wave movement up into wave C. And what is really interesting, that this reversal to the downside is looking quite aggressive, okay. It's not slow or trapped in some kind of a limited trading range, but actually it's a very aggressive move to the downside. So my thinking is that this is actually a personality of an impulse, which means that even more weakness could be seen, especially after any 3-wave recovery, because you know that impulse from a new high or from a new low is important evidence for a change in trend, at least temporary change in trend. So what I'm thinking is that we are going to see much lower prices in euro dollar, and that current consolidation during summer is just a pause within current downtrend. Okay, so on a daily chart, what I'm seeing is, as I said, completed 5-wave rise here for wave C, and then we have seen a very strong drop, and now we are seeing a pause. So actually this pause came at this 2017 trend line and at this support. Okay, it's a very nice support, but as I said, important corrections, important structures are normally formed at important levels. So I think that this is important support, but markets needs a little bit more time to take out or to break or fall beneath the important support. So I'm thinking that this is just a wave 4 and that we will see break to the downside. Also, this wave 4 appears to be maybe a triangle. However, triangles are very tricky, okay, because you may see a triangle in wave 4. Okay, if this is a wave 4, okay, you may see a triangle here in wave 4, or you can also see triangle in the middle of a wave 4, okay, like here. Okay, so actually this would be a triangle for a wave B, but in both cases I think that there is and there will be opportunity to catch some downside on the euro dollar, because in both cases I track move from that low as a correction. So as I said, it's possibility that this is a triangle in a wave 4, but you still need a break beneath this bearish level to confirm further weakness into wave 5. Okay, so this bearish level definitely has to be taken out. So as long as this level is actually holding a support here for wave D, there is a chance that actually we have a deal with a triangle in wave B. As I said, this is in the middle of a wave 4 corrective rally. So in such case, a spike above this wave A swing high would be only temporary. So continuation to the downside would be would come with a delay, probably at the second part of August. Okay, so for now it's still very limited trading range here, but important is that we see a triangle either in a wave 4 or in a wave B, which means that in either case the upside on the euro dollar can be limited. Also, what I like about the euro dollar price structure is actually that market is making or forming here a right shoulder of a head and shoulders bearish pattern. So I'm expecting to see a very strong break to the downside. Okay, and clearly this old school technical approach confirms actually the Elliott wave bias as well. Okay, now let's take a look on cable. Now cable is also bearish, even more aggressive to the downside if we consider this very strong move through this 2016 channel support. So clearly trend is to the downside, but we have seen some spike recently below 1.3 level. This is also psychological level from where we may see some kind of a pause now for a wave 2, maybe even a flat correction. So as it stands right now, what I would love to see on cable is potentially even higher prices for maybe for a flat correction, as I said, and then new turn or leg to the downside in August. So actually what resistance I'm looking at is at 1.3358 and another 100 pips higher. Okay, so that would actually be ideal resistance area for a new push to the downside. Of course, bear market is also, as you can see, very strong, so even any earlier breakdown would not be surprised at all, actually. Okay, because it's just a matter of time when cable will get even weaker or dollar even stronger, if you want. Okay, now let's take a look also on Aussie dollar. Aussie dollar is also bearish. Clearly, just look at this monthly chart. We have a nice move to the downside since 2011 highs. So this was a first consolidation back then. Then we have seen a strong breakdown, then second consolidation, strong breakdown, and now we have another consolidation. So what we can expect? Well, if you focus on probabilities versus possibilities, I think that it's more probable to see a next leg again to the downside rather than a turn to the upside. So I'm looking lower, expecting more Aussie weakness. Also, this is a major trendline support that appears to be broken. Market has been sitting on that for some time. So if we are now back in a new bearish leg, I think that there is room for very aggressive fall, actually. And here's also the weekly chart. Notice a nice corrective recovery, broken ending diagonal or wedge with the old school approach, if you want. So clearly this should take us much lower. Okay, also on a daily chart, what I see at the moment is that in this downtrend channel, prices still clearly are bearish, and also we are at a slowdown at this support. So this support actually may not hold for a long time because I see a triangle consolidation. Okay, so it's just a pause with an ongoing downtrend, and because I haven't seen any 5-wave rise from the low, so this was a low here, and notice that this recovery was not in 5 waves, was in 3 waves. So back then this lag, this structure was my confirmation that this is actually just a temporary pause with an ongoing downtrend. So either back then I thought that this was maybe end of a wave 4, or it's part of a complex wave 4. Okay, so I'm looking definitely for consolidation and expecting to see this floor broken soon. However, if this is a triangle, then you should wait a little bit longer for a breakdown, so because this is wave A, B, C. Now we are in wave D, and wave E still to come. However, next week trading could already be very, very interesting here for bears. Regarding a longer term view on Aussie, what really matters is also Chinese yuan, because Chinese yuan and Aussie has a positive correlation. Actually, I can take a look at dollar against Chinese yuan, and you will actually see what I'm looking at here. You can see a very strong rise here above this channel of actually corrective channel, which confirms that we are in a new leg to the upside. So this 2016 highs could be retested, which means that on the other hand, Aussie dollar could also retest 2016 lows. Okay, so be aware or keep an eye on Chinese yuan as well. Also, I have here this 4-hour chart, clearly impulsive structure in progress, but maybe sooner or later we will see this pull back into wave 4 down. Okay, and then when new leg to the upside occurs here on dollar against Chinese yuan, that's when Aussie could also break to the downside, because if you take a look at this correlated chart here, refresh here, you can clearly see that we have positive cycles. Okay, between Aussie inverted versus dollar against Chinese yuan. Okay, now let's take a look on dollar CAD. Dollar CAD, this is some very major breakout actually above this channel resistance line, but we may see now a pullback because this first shape here looks like a wedge. So maybe this was a leading diagonal and this is wave 1, and now we are in wave 2. So watch out for this trend line. It could be retested because major trend line forms a major breakout, but after a pullback you may see a retest of this major trend line. So ideally we will see a retest and then new leg to the upside. Okay, so I think that in by the end of 2018 we may even see a retest of this wave B swing high. On the daily chart, this is a leading diagonal that I said 1, 2, 3, 4, 5. Now we are in an ABC pullback. Watch out for a retracement back into this former or old swing high if you want, and this was also a triangle pivot point of this former wave 4 here, consolidation. So 38.2% is maybe a very interesting area, which means around 1.2950 or so. Now let's take a look on dollar Swiss. Also this pair is clearly an uptrend. I'm looking here for continuation higher within this WXY very big complex correction up from 2011 lows, and I'm expecting definitely another push to the upside after this broken trendline resistance here. So it appears that complex wave B correction is completed and we are headed to a new highs for a wave C. On the daily chart, what I like is this, as I said, this broken trend line, which is also retested as a support right there, and now we are maybe in a triangle consolidation as shown here on this 4-hour chart. Okay, clearly a sideways price structure, which means it's supposed with an uptrend. Okay, so I'm looking actually for the waves D and E to complete this structure, and then watch out for a new break to the upside. Now let's take a look on dollar yen. Now dollar yen is pretty interesting. It came to the downside quite aggressively. So what I think it can be going on is that actually wave D might have already completed wave D within this triangle. Okay, I thought that this wave D will be a little bit, because of dollar strength in general, I thought that this wave D will take us a little bit more higher, but what I noticed is that actually market stopped at this trend line resistance. So this is actually not a surprise. However, don't get too bearish, especially not on the longer term, because I see prices only into a pullback for a wave E. Okay, so what I see is that market is now trying to break this trend line support, which could cause another free wave drop here, especially if risk off will take place, if stocks will turn to the downside. We have seen some nice sell-off on Friday, so I think, and also sell-off from resistance. I will take a look on the S&P 500 later. Actually, this sell-off on stocks could make Japanese yen even stronger if we consider that Japanese yen is already showing its trend. Okay, so maybe watch out for some yen crosses that I will call also for more downside on yen crosses that I will also cover later. So generally speaking, we have 5 waves of decline here. Okay, so more downside after pullback definitely can be expected, but because we are bearish on euro dollar, Aussie dollar, even pound dollar, watch out for those euro yen, pound yen, Aussie yen crosses as well, because obviously this should be much weaker than if this dollar yen will stay under pressure. Now let's take a look also on gold. Now on gold, as you know, we are tracking this consolidation within downtrend. Now consolidation is now in place for what? For 3 years almost, and it seems that it's still not over, because I'm looking at a triangle, so you need 5 subwaves, A, B, C, D, and E. Now we are in wave E. So wave E actually may go underway very soon, because I see prices trading in extended wave C of D right now, hitting 61.8% projection level, which is very important for potential new swing from one subwave within this triangle into another subwave, which means that this wave D could be coming to an end. And what is really interesting is that CFTC data actually showed that we have gold shorts at extreme levels. Okay, so this is on zero hedge actually. So what you can see here, that we have a lot of shorts, okay, right now on gold. But it's very interesting to see this data now when gold is very low. So when you see this an increase in shorts, it actually can mean something else. Okay, it doesn't necessarily mean that we will see more weakness on gold. It can have a psychological impact, which actually can suggest a bounce on gold. Okay, and this has been seen plenty of times in the past. You can see here as well, gold moves strongly to the downside. Extreme levels will meet right there. We have seen a recovery. Same here, extreme levels there. We have seen a recovery, and plenty of times you will see that something similar has occurred. Also extreme shorts were here, and we have seen a recovery on gold. So also now when we are here, maybe it's new cycle coming actually. So this perfectly goes in line actually with our wave count. We suggest that sooner or later we will see a free wave recovery on gold here, and then you push to the downside. However, definitely this level, or maybe spike below this level, could be seen before this really wave really gets underway. Okay, so for the short term, I stay bearish here for another leg down, and also the reason is this recovery, which after all was made by corrective subdivisions. Okay, now let's take a look also on crude oil. On crude oil, definitely on a weekly chart, not really sure if this was wave 3 and we are going to see much higher prices, or wave C, but what really matters at the moment to me is that we have a completed 5-wave rise up from 2017 lows. Okay, and also what matters is that this reversal from the high was very aggressive and impulsive back to this trendline support, which can be broken out soon, because notice that this recovery from recent swing low from July lows actually was very slow and overlapping. So there's no way that you can count this recovery in 5 waves. So if it's not a 5-wave move, then it's a corrective rally, only a temporary move, which means expecting more weakness. So definitely I'm expecting more weakness here on crude oil, expecting a breakdown soon. And ideally this daily close below bearish level here at 67.50, I think could really take us beneath 66, and on a daily chart actually 63 level or 63.50 would be first target when this breakdown occurs, and then the second would be this pivot point of the triangle of 2 lesser degrees of this 4th wave. Okay, so crude oil definitely bearish, and even this makes sense if we consider the dollar is still in uptrend. Okay, now let's take a look on the S&P 500. Now the S&P 500 monthly chart, I still think that this wave 4 is maybe unfolding, that it's not over yet, because in the daily chart what I see is price at important resistance line right there, and also of this potential ending diagonal for wave C, and also this parallel channel resistance for a wave B. So turning aggressively bullish right now here would definitely not be the good timing. Okay, I still think that stocks are too high, and that sooner or later we may see another fear putting into this market, and that actually prices can come much lower to better prices if you want to look for some long ideas here. And also, even if I have this alternate count which suggests that this after all could be a complete triangle formation here for wave 4, I still think that pullback is coming, because if you will take a look at the intraday structure for wave E swing low, you will be able here to count 5 waves, which means that the pullback may take us back to this trend line. Okay, so actually this trend line connected from the highs is very important, and also this triangle line is very important. So there is room for another 50-point drop or so. So if you take a look at the 4-hour chart, now this is the structure from that wave E level right there. Okay, from here we have waves 1, 2, extended wave 3, triangle for wave 5, then small 5, sub waves within wave 5, and now maybe we are already in wave A. So this sell-off on Friday is very interesting. It definitely suggests that we may see lower prices, and as I said, yen crosses could also see more damage ahead if this risk off will be really seen, because also DAX, despite looking here for a triangle within uptrend on a daily chart or weekly if you want, I see on a 4-hour chart price at the first resistance. This was also a gap here at 61.8%, and there is also, I don't know, I'm not sure, I forgot to check this if this is a valid gap here, but definitely very strong resistance up there at 13,000. So I think that sooner or later we will see a reversal to the downside for wave E pullback. Okay, and the reason why I think that upside is limited, because here was also a triangle here in the middle, and triangle occurs prior to the final leg within this uptrend. So this is actually current uptrend looking from there, from 12,000, and actually it means that we are now in a final leg of this recovery, wave C. So sooner or later maybe we'll see a reversal back into this triangle area. Okay, so watch out for ABC pullback here. Also, if this is going to be the case, then as I said, Japanese yen could see more upside. Look at euro yen 4-hour chart, clear waves A, B and C from the lows, from May lows. Also, what is interesting, that this wave C was much slower compared to wave A, and this is a perfect Elliott wave personality when you're tracking corrections. You want to see slower price action, but still moving to the upside when you're tracking a corrective rally. So there was a slower price action. In wave A we have seen much sharper moves, which means that bullish momentum was decreasing, and actually this momentum could now increase with bearish legs. Okay, especially if we consider that this first leg down is already looking impulsive. Okay, so it's a 5-wave movement below this trendline support, which means more weakness can be following ahead for a wave 3 to the downside. Okay, also if we take a look on pound yen, also here we have the same thing, actually 3-wave recovery that stopped at this parallel trend line, and where is strong reversal. Actually it means that this is a change in trend, but watch out for pullbacks. Ideally this will be first resistance 146. Bearish trend is very strong, so actually corrective areas may not be so deep as you think. Okay, because if this first leg is very extended, and if we think this is a wave 1, so we see bears very strong, which means that bulls may not have a chance actually to even retrace for 50 or 61.8%, which in Elliott wave theory is either level. Okay, but what I'm thinking is that actually we will see resistance to find much earlier than 50 or 61.8% compared to this leg. Okay, also ASEAN is very interesting as well, but not yet. Maybe we may wait a little bit longer, because if this is a triangle, then still we are only in wave D, so wave E is also missing before we may get this break to the downside. But what is important is that this is clearly a corrective pose within downtrend. Okay, so you want, if you want to look for setups, then consider that there is opportunity to see a break below 80. Also, final market, maybe if we take a look at Bitcoin, just a second. So what is happening on Bitcoin? Well, we have seen a very nice reversal from those lows for sure, and it looks like that we are now temporary in bullish trend. I'm not sure, temporary, maybe this is already a new cycle, but and so I'm not sure if this is going to be only a 3-wave recovery or a new 5-wave recovery. But what really matters to me for the short-term basis is that we have seen a nice break above this trend line, and this trend line could now react as a support right there here for wave 4. Also, this trend line was already tested here, so maybe a new leg to the upside is coming from here or from slightly lower levels, but watch out for nice supports around that area right there. Okay, around 7,200 up to 7,700. So that's very interesting area from where I would be expecting a new leg to the upside. Also, if you will just a second, if you will draw this channel, this appears to be very important. So normally when you see a channel, or sorry, a price breaking aggressively above this upper parallel channel, okay, so firstly I thought that this was actually going to be only an A, B, C rise, okay, and that we'll see a new leg to the downside. So I was wrong on that one. Okay, and what is really important for me is to respect what the market is doing. And since we have seen accelerating price action when market broke above this upper trend line, when I firstly thought it's a corrective channel, it actually provides an extended leg to the upsides for a wave 3. So normally accelerations, extended move are shown in wave 3 of a new 5-wave cycles. So ideally we are now making a new 5-wave rise, and what is really interesting about this channel when it gets broken is that when a reversal occurs for a wave 4, you may see a reversal back into this trend line and then a new bounce higher for a wave 5. Okay, so definitely I'm looking for more upside here on Bitcoin, and I would be expecting and stay with this cycle as long as we are trading above this wave 1 swing high, which was at 6,800 or around there. If we see a drop below that level in aggressive 5-wave structure, then definitely I would again be looking for new low and possibly focus on 5,000 in such case. Okay, traders, thank you very much for this for your attention. I hope that you enjoyed the video. If you have any questions, please try to contact me on Twitter. Okay, have a good day. Bye.